Okay guys, welcome back to the next lesson. This lesson is about how the market likes to move, the behavior of the market, and how to understand what is taking place. Okay, so I'm going to be going through market structure, and the first thing I want to speak about is how the market moves. And the first topic is going to be higher highs and higher lows, and lower highs and lower lows. So HH, HL, higher highs, higher lows, and LH, LL, lower highs and lower lows. Okay, so write that down. So guys, let me go in the blank area here. So let me get my path tool. Okay, so in order for you to understand, okay, a trend or where the market wants to go, you have to see the footprints that the market is leaving. Okay, so in this case here, you will always see this on the chart. Okay, so the market is going to do this. So in a downtrend, this is how the market will look. Okay, so boom, it will come down, it will retrace, it will break the last point over here. Okay, the last point, which is this level here. Okay, it will break that, and then it will retrace. It will break the following, then it will retrace. It will break the following, then it will retrace. It will break, and then it will retrace. Okay, it won't always look this neat. It won't always look this neat. It might be, but this is exactly how the market moves. Okay, this is in a downtrend. Okay, over here we call this a break of structure. So as soon as the market comes down, it retraces and it goes lower than this point here. Okay, when it breaks this point right here, this is called a break of structure. And now you guys are thinking, okay, based on the last lesson, once price breaks structure here and it comes back to retest here, the retail traders enter sells here. Why? Because for them, they're taught that what this is now resistance, right? No, price extends, it overextends, and it stops here, and over here would usually find a supply zone where there's a bearish order block. Okay, and that's why the price reacts from here and not at resistance. Okay, so that is simply how price would look when there's a downtrend. So you simply wait. You're not entering the trade when it breaks. You're waiting for the pullback. Okay, this is called a pullback. Okay, and I want you guys to really never get in the habit of, you know, missing out. FOMO, the fear of missing out. Whenever you see a move taking place, you're thinking, oh damn, I'm missing the trade, let me enter the trade. No, just be patient, guys. Sometimes no trading is trading. Sometimes you have to sit on your hands and not place a trade and just watch the screen and wait for your POI to be triggered, your price of interest. Wait, just be patient, because a lot of the time when you're hasty and you're just entering trades for no reason because of the fact that you want to make money today, or you don't want today to be a no trading day for you, you're going to find that's going to be very detrimental to your trading, because you're now forcing setups that are not even there in the market. They're not even available. There's no opportunity in the market right now, but you're forcing it. Why are you forcing it? Relax, take your time and look at the market and read what's being said to you. Okay, so in this scenario here, we're simply waiting for a pullback. Once the pullback comes and we find our supply zone within this area, what we're going to do, we're going to take the trade like we learned in previous lesson. Okay, and we're going to target lower. Okay, what's going on here? Okay, we're going to enter the trade and we're going to target lower, and our stop loss will lie above the supply zone. Okay, so this is how the market moves, guys. If I show you guys the chart later, when I show you guys the chart later, you guys will see. So in an uptrend, it's the complete opposite. Okay, it's the absolute opposite. So what price will do in an uptrend, this price will come up, come down, come up, come down, come up, come down, come up, come down, come up. Okay, and this is what we were speaking about. So I want you guys to mark it up. Whenever you see this pattern, mark it up, guys. This is called this is where the price starts. Okay, so over here, this is the highest point. Okay, and price forms the lowest point. So over here, this is called a higher high. Why is it called a higher high? Because it is higher than the previous high. It's higher than the high that is over here. This is called a higher high. Why? Because this high is higher than this high over here. This now is called a higher low, HL. Why is it called a higher low? Because it is higher than the previous low. It's higher than this low over here. Now, this is called a higher high. this point is the new higher high. Why? Because it's higher than the previous high. It's higher than that high. Okay? Next, you guys get the gist. This is the new higher low. Why? Because this low is higher than the last low. Okay? You guys get the gist. This is how the market moves. The market forms higher highs and higher lows in an uptrend, and the market forms, let's go back, and the market forms lower highs and lower lows in a downtrend. So this is a lower high. Why is this a lower high? Because it is lower than the previous high. This high over here is lower than the previous high. This is a lower low. Why is this a lower low? Because this low is lower than the previous low, and so on and so forth. Okay, lower highs, lower lows, lower highs, lower lows. So the market will form higher highs and higher lows in an uptrend, and the market will form lower highs and lower lows in a downtrend. Make sure you write that down, guys. Okay, so next up, I'm going to go through market behavior. Okay, you're not always going to find an opportunity, guys. You're not always going to find an opportunity. So I want you guys to write this down. The market follows 3 steps. Okay, the market follows 3 steps, and I want to make this quite big. Okay, so the first step is the market will move. There will be a trending market. The market can do 3 things. Okay, the market will only do 3 things. The market will either trend. Okay, the market will either consolidate, or the market will retrace. The market can only trend, consolidate, or retrace. Okay, and these are retail concepts that are taught, so all we do is navigate around this, guys. Okay, all we do is navigate around this. Some people might say, oh yeah, I'm getting in the trade because price hit my trend line. Little do they know, they're about to get liquidated. Why? The price is going to hit their stop loss. Why? Because 95% of the traders around the world trade exactly the same. So we want to become the 5% of the traders that don't trade the same. People might say, oh yeah, price is consolidating right now, so I can't find an opportunity, which could be correct. There's not always opportunities in the market, but you know why price is consolidating. In trading smart money concepts, whenever we see a consolidation basically means this. Look, whenever price is in a region, I'm going to show you guys real life examples, but for now, this is all consolidation means. Yeah, consolidation is whenever, or you can use the term consolidation or the term ranging. So if someone says to you we're in a ranging market, that means the market is just stuck in one area and it keeps going up, down, up, down, up, down. Or it could be more choppy. It can just be like this basically. It can just be like this, and the market can just be in one area like this. Okay. So all it means when price is consolidating is price is in one area. It's not moving. You can draw a box around it. Price is not moving from that area. So whenever retail traders say, oh yeah, price is consolidating, really and truly what's happening is smart money is allowing retail traders to enter the market. Okay, and all it is they're creating a pool of liquidity, so that, like we spoke about before, so that now that there's buyers in the market, so in order for there to be a buyer in the market, there has to be a seller in the market, right? So all that's happening when there's consolidation taking place, whenever price is ranging in an area going up and down, all it is liquidity being built up for smart money, i.e. the hedge funds, the corporations, the large banks, the people, the millions and hundreds of millions of dollars that are trading the market. All it is enough retail liquidity lying in the market for them to now enter the market and for the real move to take place. That is all it is. Okay, and thirdly, the market will retrace, and this is something that everybody follows. Okay, the market is just going up, 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 up. That's too good to be true. Okay, the market has to come down. The market has to come down. Why? Because smart money needs to enter the markets. Okay, smart money needs to enter the market. Stop losses are going to be hit. People that are not trading correctly, their stop losses are going to be hit. Okay, so whenever price is going up, it must come down. Okay, it must come down. Whenever price is going up, it has to come down. It has to come down. Okay, so I want to show you guys an example of trend, consolidation, and a retracement live in the market right now. So let's delete this, and let's go on to, let's say for example US 30. Let's check out US 30 because we've been doing Euro USD for some time now. Okay, hold on. Okay, so we are now on US 30. We are on the daily time frame. Okay, so Step one was trend, right? Where can we see a trend in this market? Overall, what has the trend been for US 30, okay? US 30, or people call it the Dow Jones, okay? So let's draw a trend line, okay? This is not the most accurate way to draw it because look, you can see liquidity was grabbed here and people got stopped out, but this is why we don't trade retail. But just to show you guys, for example purposes, right here you can see what is the overall trend. Overall, we are in a downtrend. We are in an overall downtrend with Dow Jones. Why? Because price is making lower highs and lower lows. Lower highs and lower lows. You can see it won't look as neat, but what can you see, guys? Okay, this was the highest point. Okay, price made a higher low. Price made a lower high and price made a lower low. Okay, price made a lower high and price made a lower low. Okay, price made a lower high from the close, not from the wick, and price made a lower low. Price made a lower high and price is going to make a lower low. That is simply what the trending market is. Okay, so let's delete that. Now let's show you an example of consolidation. Okay, let's go to the 4-hour time frame to get a clear consolidation. Okay, let's see what area of consolidation can we find. Okay, I can find an area. I found an area right here. Area of consolidation right here. Okay, is that the best one to use for now? Well, maybe this one would be best, I can't lie. Okay, let's zoom in now. Let's go to the hourly time frame. Okay, so cool. Let's use this one actually. So what can we see here? This is an area where price is ranging. Price has not left this area. Can you see, guys? Whenever price goes up, it comes down. It's just stuck in this box. It's stuck in this range. You see, this is called consolidation. This is called a range where the market is ranging. The market hasn't made up its mind yet. There's indecision in the market. And what is happening here is simply a build up of liquidity. Okay, it's a build up of liquidity. Retail traders are waking up every day looking for opportunities in the market, but there's no opportunity right now. Why? Because there's not enough liquidity to move the market. Okay, there has to be the buyer and seller exchange in order for the market to move. In order for smart money, we're going to refer to, okay, from now on we're going to refer to the corporations, the banks, the people who trade smart money concepts as smart money. So whenever you hear smart money, think of the people that have the billions and millions and millions and hundreds of millions of dollars to move the market. Okay, so you guys are at the stage now where you guys can understand some of the terminologies. Okay, so there needs to be enough liquidity in the market for smart money to enter and take liquidity to move the market. So over here, this is simply a build up of liquidity. Retail traders are entering the trades. So liquidity, there's liquidity here, there's liquidity here, there is liquidity here, there's liquidity here, there's liquidity here. Okay, there is liquidity here, there's liquidity here, there's liquidity here, and you guys get the gist. Okay, what happens is smart money enters the chat and hey, everybody gets liquidated to the upside. Okay, so all of the liquidity, all the traders that were in the trade from here, their stop losses have now been hit. Okay, and all the traders who were in the trade from here and from here, who were trading support and resistance, there was buying at the bottom, selling at the top, buy low, sell high, buy low, sell high, all of them got finished. Why? Because they're thinking, yeah, the market is consolidating, so it's you know, it's price is making higher highs and higher lows over here, so price is about to shoot up, or price is making lower lows and lower highs. This low is lower than this is a lower high, so this high is lower than that high. So let's get into sales. What happens is price comes all the way up, stops them out over here. So this is why we trade smart money concepts. Okay, so that was an example of consolidation. Now let's show you an example of a retracement. Okay, let's show you an example of a retracement. This will be the perfect example. Okay, this will be the perfect example. Let's go into bar replay mode quickly. So price is about to drop now. Okay, we can play it. Price is dropping, 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 dropping. It will be too good to be true, because that means everybody can make money if everyone is just selling the market as the price is dropping. And remember guys, when you're trading, you make money both ways. When the market is dropping, all you do is click sell on your MetaTrader 4, and when the market is going up, all you do is click buy, with your analysis of course, not just that by itself. Okay, so the market is dropping, dropping, dropping. The market has to make a pullback. There has to be a retracement. There has to be a retracement. So we're waiting for the retracement. Okay, looks like the retracement has started now. Okay, maybe not just yet. Okay, that's the retracement right there. You see, price pulled back, and that is an example of a retracement. So whenever you're about to enter a trade and you feel like you missed the trade, don't worry. Price will always come back. There's opportunities every single day in the market. You just have to find those opportunities. Okay, don't stress, don't worry. If you feel like you missed out, you haven't missed out, trust me. Okay, liquidity lies in the market every single day. Every single day liquidity is taken, so there's new opportunities for you to navigate around liquidity and trade liquidity grabs. So whenever the retail traders are getting stopped out of the market, we enter the market. That's our aim. Okay, so yeah, that was trend, consolidation and retracement.